I will start it off on gold. Okay, let's do that. What you are finding at the moment, markets, are varying a little bit. Some are down, some are up. Some equities are up. Gold today is down. Okay. We've had minor UK news earlier, didn't do too much. If you look at your euro, it's basically zero movement, pound low movement as well. But you do have various news events coming up, lots of Eurozone news and Canadian retail sales. So yesterday we spoke about shorting gold lightly. Okay. If you did it, you've got a fall and it's time to exit. Okay. Because you can see that the market is poking up slightly here. It doesn't look very strong to the upside, but nonetheless, you've got gains on that fall. So I would be out of that if you did look at it short over here. Good work. Remember, we said, okay, well, if it does get slightly higher, great, we can re-short more. But if you took that lightly, you had minor risk and you will have had a fall. And you've got the fall. You don't need to wait and wait and wait and wait. Just kill it off, okay? Because remember as well, what's happening is you're resting down at those levels here, this support here, okay? So just remember that is key for your exits, because if you look to the left, it's likely price will bounce, okay? So be wary of that. Ultimately, I think gold, yes, it is going to come right through. So just be aware of that as well. But you've seen it bounce before at these levels. You've seen the rejection, okay? You've seen it, so it's time for you to say, okay, well, I want to kill it off. And really, the goal is to trade in stages, okay? Because if the market does come through here, okay, yeah, you did exit. But this is really the fact about trading, okay? The market may, and I should think eventually it will drop down here. We've said about various different zones for longs, but there's two ways you can do it. You can hold for that to happen, and it potentially not happen in the near future, or you could have taken gains here, okay, and here, and here, okay. So there's 4 sets of gains there to the short side, and every time you're exiting. And you know it might come down lower eventually, but you don't care. You've got 4 sets of gains. You don't need to worry. Now, when it does eventually get down there and then it rebounds, that's where you want to re-short, because you're looking to trade that trend to the downside, you see? And that's how markets move. So once you come up, push away, come up, push away. And you can see that if you don't believe me, look here. What happens there? I mean, that's an oscillation, isn't it? Okay, is that not an uptrend? Can you see? You only need the highs for that. You can see that's an uptrend. So, yes, it might fall through. And if you're sitting there hanging on to those those shorts, then it's completely up to you. But you might find that it bounces again. Okay, so you're just missing out. So take those gains, get them off the table. You did really well. You shorted in line with the trend. Great, you've got the money. Take it. Okay, that's why exits are important, because you can drag lower, yes. But if you just kill it off, you've got 4 sets of gains there. Any questions, guys, put them in the chat box. Anything at all. So the DAX, I'm just rolling through my watch list. The DAX, you're hitting on early support, a lot like the UK markets, the FTSE. I would kill this off. I probably wouldn't trade to the long side. It's very, very early on. The same thing for the FTSE. Okay, you can see it's pushing up to highs again, and it's not as ideal. So it's still a short. I like the FTSE short a lot. I really do. Okay, I would be absolutely short. Well, I am short. Okay, so it's because, look, you've got 4 candles right up. And that's where we're looking to sell. Again, exit. If you were holding that long, just kill it off, because you're coming up to a high price again. Crypto markets, just quickly. Ethereum, I spoke about. I did a video about. What's happening is you're hitting on early levels. Now, often early price action levels will rebound if the market is moving up really harshly. So literally the 10th of March, okay, 5-6 weeks ago, you were down here. So in just 6 weeks, you get all the way up there. That's a really harsh moving market, and you can see your pullbacks are really minor. And that's what you're getting here again. It's just following the same thing. But I'm really not interested in getting long until you fall significantly further, because unless you can do that, if you buy up here, you're just buying a high price. Okay. So you don't want to be buying high prices. You want the markets to do their thing and to fall lower. It's the only way. And that's why I use these moving averages in particular, because I know the closer I get to a 100 or 200 MA, the better the price is going to be. I'm not looking to hit it. It's not the fact that I'm hitting it and the price is moving away. It's the fact that that really controls price. Okay, that controls the value of price. If the price is nearer the 20 or the 40 MA, it's low value a lot of the time. It doesn't mean you can't buy or sell, but it's not the most ideal. So for the S&P, you're still lackluster on the S&P. I won't spend too much time on it because I've spoke about it a million times already. The S&P is just not moving, basically. It will, though. I mean, the point of why I do all these lives is just because this market will, you'll probably get an impulse move if you do go up to this point, and if you go down, probably around the mid-level of this sideways-ish movement. Okay, so it is a minor uptrend the last, since October, 6 months or so. In fact, what I'll do is I'll drop to a lower time frame and draw it. Let's go for the daily. I will just get rid of that for a minute. What you can see is lower lows, okay, and you're getting higher highs. All right, so that's your uptrend, and that's why I'm short slightly higher as well. 428 is very ideal. This is looking like it's not coming far. I wouldn't be surprised if you get up here, but like I said, if you don't, you'll get nearer this midline of the channel. And I like taking a small piece long at this point because you're at the middle of a price channel. And that means you've got fairish market value for longs. And there's a lot of PA to the left-hand side. Okay. So again, you can exit shorts now. You could have exited shorts several times here. And I'd have to zoom in a bit for this. I won't go the 4 hour just yet. But if we come under here, you don't need to gamble on that. Just let it do its thing and then take it long. And it's going to come just under this midline in the uptrend. So that's very ideal. So my long bias comes 4060 for that reason. Okay, the channel pulls down before it goes up. And if it comes up before it goes down, I like it to the top of this price channel. Again, remember the markets move in channels. You can get that at my academy under this video. All rules for that and indicators to draw it for you. But nonetheless, your short side is coming 4280. Okay, and that's again because you'll be so many technical factors. I mean, you'll probably have your stochastic oscillator pull up into overbought again, and if you just look to the left, you've got significant PA levels over here, historic PA. In other words, the price stops loads of times, so it's a reactive area. So 4280, I've got short entries and I've got light entries 4080, and I've got further entries 3920 to the long side. So yeah, that's how I'm looking to trade it. But again, exit your shorts. If you took it short, you've got gains. Kill it off and just look long lower. Well, that's what I'm doing at least. Don't guess when this is going to happen. Just take your profit and reshort higher. I don't know if this chat box is functionable and what's going on. If you do have any questions and it's not appearing there, just type them in the Discord, please, or send me them via DM and I'll go over them. Pound yen, I called it short, and you've got your short. Okay, bang. It's straight down, and you're coming to, again, very early PA. And it's the same principle like I've been saying. Just kill it off. If it gets down here, it gets down there. Okay, but it's likely if you're hitting early PA first, you might get a slight jitter, and you don't get there immediately. Okay, and it will take a minute to get there. So, in other words, the markets you know, there's going to be no set time when you do reach certain points, right? But they do come ultimately. So instead of holding one trade, you can trade it several times till you get there, right? If you put it to an hour, this is a minor push up. But even if you come slightly lower to here, okay, you might find again it comes up. So it's, you know, you can trade it in stages or trade it in one go. Personally, I prefer to trade in stages and take exits as the market falls. Nonetheless, you took it short because you were far off these MAs, and now you're coming back to reality. You're coming back to those key price action levels. Yeah, I think there's a disconnection on that chat box and everything on there. So I may refresh it in a bit, but I'm just going to run for a few charts first. Again, I called pretty much every yen short, and they're getting slammed. If you took this odd yen short, great work. Okay, we spoke about that, and you've got this big smash red candle. Kill it off the gains. Okay, out. You're out of that trade. You're done. You're dusted. You've got the money. Okay, take it. Don't wait. Don't gamble. Just take gains. And just repeat it, guys. Take gains and repeat. Okay. There's no good holding on because you think it's going to go lower, because yes, it might. And that's the truth for a lot of assets. It might, but there's so many levels in the way that you could be holding on for weeks or months. Okay. Or it might not go there for years. It might rebound. So just take the money off the table. If you have a fall or you have a rise and you took it long, you've got an exit, take it. Okay. Don't mess around.